Hey, this is Through a Trader's Eyes with Carl Eggers. This is the video podcast. Thanks for joining me, everybody. Appreciate it. The stock market is now closed here on this Tuesday afternoon, September 25th, and it's my daughter's 8th birthday, so be cutting out a little early to go celebrate that with her, to be 8 again. But the stock market was certainly not celebrating today. The Dow finishing down a little over 100 points, 13,457. Pretty much everything across the board was down. Really, the only thing up was volatility. And if you saw it this morning, you're probably saying, I don't understand what happened. Well, the stock market sold off at the end of the day. There were some riots. There's obviously more concerns over now that QE3 is done, basically done from the standpoint of being announced. Is it going to work? And, of course, there's Fed presidents saying they don't think it's going to work even though they voted for it. And so there's growth concerns. We still have companies coming out telling you that things are getting worse. And for whatever reason, the stock market had been going up, simply ignoring that. But you can see the numbers there pretty much red across the board, or I guess it's black across the board. These aren't turning red, but there's a green one. So it's green and black. So anyways, that's what the market did today, as you can see. Now, this won't be a real long podcast. You know, we did a little more in-depth one last night, basically saying that the market was looking, really just looking tired. You know, if you looked in the last month, it was just, and this is actually an hourly, but you can see hourly how it was just meandering. It wasn't selling off. There was no real intensity until today. And we were pointing out in last night's podcast that you had some reversals. For example, if you look at the home builders, you know, where they made a high. In fact, if you look at the ITB, which is the actual home builder ETF, it made a high and then ended up closing close to its lows on the day, just signaling that perhaps things were getting a little frothy on the upside. And so we didn't seem to get that follow through this morning. And then as the day went on, the market weakened, and then it really accelerated to the downside. In fact, if you take a look at the market on a 5-minute picture today, you'll notice here it, again, gapped up in the morning a little bit, got stronger, and then sold off as the day went on, and then accelerated into the close and pretty much closed on the lows of the day. We did not qualify as a 90% down day. There are some people saying it was. It was not a 90% down day as far as the way I calculate it. So very close. Still a pretty bad day across the board. And you did see, you know, even some of the areas that have been doing fairly well lately, like financials, were down today, as you can see, down about 1.5%. Even healthcare, which made a new 52-week high today and then reversed and finished flat on the day, still beating the market, but reversed. So pretty much everything across the board got beaten up. And if we go back to the market, you know, we were talking about in last night's podcast that if you're wanting to buy, you would be doing it after one of these, it kind of had been in a zigzag pattern. You know, we had been bouncing off of this, not quite coming down to the 200-day moving average, but we had this pattern going and never came down as low as a lot of people thought it would, and it raced up. And once it broke through strongly, and then we got QE3, which was the next big breakout. And ever since QE3, things have tapered off. And so it only makes sense that at some point we would come down to somewhere maybe right in here and then go up again. So if you're bullish, this is what you've been waiting for. You've been waiting for a pullback. But the human mind doesn't work that way, does it? What happens is we see this and we say, boy, if it ever came back down to this level, man, I would love to buy it. If it gets down to this level, guess what you're going to be doing? You're going to be looking at some things that you have gains in, want to protect them, start selling, maybe even start shorting, and maybe that will be the right trade, but it's very difficult for your mind to act as a contrarian, and it's very easy to say, I'm going to go buy something when it goes down to this level, but when it actually happens, it's really hard to pull the trigger. So that's just a normal human reaction, something we got to fight. But if you have cash and you're in a pretty good position, then you have more courage, we'll call it, to go in and do those types of trades. But it does look like, at least just simple technical patterns here that we could come back to the old breakout level, which would be about 1420, I guess, on the S&P. And this is actually the picture we were shown last night of the S&P. That was the ETF SPY. This is the actual S&P index. And 14, we were saying it could either hit this trend line right here, or it could actually come back down to this 1420 level, which was the old breakout. Either way. Now, what would really get the bulls scared and the bears fired up would be, of course, if we broke the uptrend and we broke that and we broke the 50-day moving average. If we did all those things, you would see the volume spike up, and you would also see the 200-day moving average come into play, which now gets you into the high 1300s, 1370, 1380. Then that type of correction really gets you antsy to start looking to buy, even just from a trading standpoint. Where we are right now, I think, is I had mentioned last night that we were working off the overbought condition by moving sideways, and I think that is still the case. But now that you got a real down day, of 1%, now you're working it off as prices are going down, so it's accelerating the process. But I don't think we're quite there yet. We're not. The pendulum, if you picture it swinging from, let's call it 3 o'clock to 9 o'clock, a full swing, maybe we're somewhere around 6 o'clock. It hasn't quite swung the other direction where we're starting to get bearishness. The bullishness has exhausted. Today was the first day that you really saw some intense selling. Semiconductors down 2.5%. Russell 2000 down 1.5%. This was the first day you saw that, and so now you're seeing that pullback kind of kick in. And I think this is really this is the area you're looking for it to bottom in. And if it doesn't, again, then it brings the 200-day into play. But that would create, I think, an easier buy point at that point because of the fact that, again, bearishness will have had jumped up, and you would see things like the VIX spiking up. It had a move today, but not a move like we saw, back in April or May, where we saw, the VIX up at 25, 26. It moved today up about 1 to 15.5. So it's not a huge move. But if we started to see this ramp up, it would certainly make things a lot easier to buy if we started to see that fear really pick up. Because what's been happening is the market has meandered down, but it hasn't really accelerated to the downside. But, we're still seeing, and I mentioned this last night. If you didn't watch last night's podcast, go back and watch it, because we talked about some of the intermediate indicators are very stretched. And one of the things I pointed out was looking at things like, some of what the Wall Street traders, what their perception is, and what the retail investor and what their perception of the market is. And those two things have been diverging, where retail investors are getting more and more comfortable, and as the stock market goes up, and the Wall Street people are getting more uncomfortable. And that divergence has gotten pretty wide, and now you maybe have seen that resolve itself to the downside with the stock market. So again, one day is not a pattern, we know, but it certainly pulled back. I don't want to say where it was supposed to, because I think there was nothing indicating that it should have stopped at this level. It's just that it was extended and continued to get extended. Now it's just coming back in line. So I think at the very best, it's just a pullback in the zigzag pattern, which has been in place since June. Worst, it could be rolling over here, but it's too early to tell. And really, the only big moves I've made lately was taking profits yesterday on GDX. Got a whole bunch of little lines here of different support levels and things that I'm watching. But, GDX had this nice move up. We participated in it for more aggressive accounts, people that like to trade a little more or accept a little more volatility. And so while I'll still hold gold, the miners we sold yesterday, and you can see it's down another 1.5% today. So again, kind of just like the market. I mean, if it came down to a level right here and held, that would be encouraging. And what you're expecting is that this trend holds and that it takes off again. And I think gold's still in a bullish stance, but certainly it's had a huge run and was due for a pullback, and we got it today. So again, sitting pretty good with a decent amount of cash, looking to buy certain areas or certain things that get really yanked down by the market. And it's just, again, it's too early to tell, but I don't think the sell-off that we started today is over just yet, because we're not fully oversold. If it ends today and tomorrow's up, it's not a good quality time to get in, because what you want is that washout that's an easy entry. And this market has been anything but easy this year, but if we get that kind of washout, then it's an easier entry point than it just going down one day. So that's pretty much all I've got today. Short podcast. I just want to update you on what we're seeing, what we talked about last night, and really nothing's changed. So not making any big moves other than really just taking some profits in the last few days. But other than that, keeping our powder dry. Thanks for joining me. CarlEggers.com, Twitter.com/Carl Eggers, Google+, Facebook, EggersCapital.com for the money management. And you got a free subscription up at the top right of CarlEggers.com if you'd like to do that. And, of course, follow us throughout the day on Twitter. Have a wonderful evening. We'll talk to you soon.